What's going on, guys? This video is going to start off our beginner's guide to charting. Think of this as the entry-level information needed to understand what the charts are telling you. So today we'll be talking about candlesticks. Each candlestick tells a unique story that tells you, the trader, what's going on. Now before we start, if you don't have a chart viewing platform or website to use, tradingview.com is perfect for all skill levels. tradingview.com. Now we recommend you open a new tab with TradingView up and running so that you can pause and interact at any moment. So go ahead and pause right now so you can get that tab up, sign in, whatever the case is, just get it up and running. All right. So when looking at candlesticks, it's important to know that they represent price action that has occurred on a smaller time frame. Let me go ahead and elaborate on that. So I'm looking at a candlestick right here. By the way, if I didn't mention already, each one of these are candlesticks. They look like candles. So I'm looking at a 1-day candlestick, which means the candlestick represents a single day. And if you look down here, you can see that it represents the 31st of January. And the day before is the 30th, and the day before, and so forth, because they're all 1-day candlesticks. Now, let's take this candlestick to an hour candlestick and look at the same time frame. So this is the beginning of the 31st right here. This is the beginning of the 31st. Let me move this out of the way. And this is the end of the 31st. So these 24 candlesticks represent that one candlestick I was looking at earlier. That one that y'all saw on the day candlestick. So that just reiterates that a candlestick represents price action that has occurred on a smaller time frame. Now, as you can see, there's two different types of candlesticks. You got your green candlesticks and you got your red candlesticks. You could think of the green candlesticks as a gain of cash money. Green gain, cash money. You can think of the red as a loss of that money. Red loss. Red loss. Easy. Now, since the green means an increase in cash or momentum, when a candlestick is green, that means it opens or starts at the bottom and closes or ends at the top. It opens here and momentum drives the price up, and then it ends up closing here. So that represents a green candlestick. It's pretty detrimental to your success that you understand open and close terminology, because it will be used a lot. But it's pretty easy. Know that the green means it opens at the bottom and closes at the top. And the red is just the opposite. So the red means it opens at the top, momentum drives the price downwards, and it closes at the bottom. Pretty easy, just showing a decrease in price. It might be a slightly confusing concept as far as when it opens and closes, but most importantly, green means gain and red means loss. Now some of you might be saying, all right, I understand that concept, but what are those lines on the tops and the bottoms of these candlesticks? It's important to know that the market never stops moving. Every second is changing. That's what the wick tells us. Yes, these lines, they're called wicks, just like on a real candle. The wick shows the highest and the lowest price during that time period. So, the market opens on this red candle up here, and then the price starts to change. Mind you, this is a day candlestick, so it's 24 hours of movement here. So it comes all the way down to this price, touches that, moves some more. Comes all the way up to this price, touches that, moves some more, and then it closes here. That is what this candlestick is telling us. So the candlestick wicks just show the highest and the lowest price that the market touched during that day. So the open and close of the market, which is right here, this little spot, the open and close, that does not necessarily mean it's the highest and the lowest that the market touched during that time period. In a case like this red candle here, the close of the market tells us that it was the lowest, no candlestick. On this green one, it's very close to having no candlestick. It just about tells us that the close was right at the highest, but not always, not necessarily. So yeah, that pretty much wraps up the video. So let's go over what you should have learned from this. 3 things. Candlesticks represent a time period. The second thing, there are red candlesticks and there are green candlesticks. Green candlesticks mean that there's an increase in price, increase in momentum. The red shows a decrease in price, decrease in momentum. The third thing, there are candle wicks, and the candle wicks show the highest and lowest price touched during that hour. Not necessarily meaning open or closed, just touched. But yeah, those 3 things are what you should have taken from this video. So yeah, that finishes up the candlestick tutorial. And now you're just that much closer to being the best trader you can be. We have so much more to show you, so please check out our other videos, and don't forget to subscribe so that you can stay up to date. Thanks for watching.